Welcome everybody from Atlanta and Chicago. Today we have a very interesting group of attendees from different industry backgrounds, which is great. I would like to welcome you to our webinar in partnership with CHG-MERIDIAN today. CHG-MERIDIAN is an international expert for efficient technology management in the areas of IT, healthcare, and industrial assets. Thank you for joining us today, and we hope that you are being well during these challenging times. Our webinar today title is Cash Flow and Liquidity Management, and we want to revisit the topic of leasing in the current situation. My name is Joe Haehner. I'm leading the foreign direct investment practice for Bekaert here in North America. I'm also responsible for industrial manufacturing service solutions, specifically with the focus on automotive and marine industry services. I'm very excited to have Markus Hiller here with me today, good friend of mine from CHG-MERIDIAN, and he's joining us from Chicago. Markus, you want to introduce yourself?
Yes, sure. So my name is Markus Hiller. I'm principal with CHG-MERIDIAN in the US. I'm responsible for technology lifecycle management consulting, but also technology solutions in cooperation with our financing programs. And yeah, quick background on my person. I spent most of my career with Siemens in global technology operations management roles, and at KPMG, mergers and acquisitions, risk analysis, technology, integration, separation. And I'm now 6 years with CHG-MERIDIAN.
Great, thank you. So it's always great to have the opportunity to work together here with a friend and kind of addressing these topics we see with our clients, talking about the cash management and liquidity solutions. A couple of housekeeping items before we dive into the topics. We are planning on 30 to 45 minutes. Be mindful with your time, the time of the attendees here for this webinar. If you have questions, please feel free to address them in the questions box or send us an email. We're happy to reach out to you and discuss your specific situation individually. With this being said, let's dive right into it. From an agenda perspective, what are we planning to do? We went through the introductions. We're gonna talk a little bit about what we see regarding cash management solutions and topics right now. Markus is gonna walk us through leasing from an operations standpoint, and we're gonna close with some remarks to the current situation. Why did we come up with this webcast? Markus and I received frequent questions over the last couple of weeks regarding cash flow management solutions, and there's a lot of uncertainty, especially now with the increase of COVID-19 cases in the United States. So we thought we would share with this group here of attendees what we are talking and discussing with our customer clients. So looking at the current surveys from the National Association of Manufacturers, we see that 78% of manufacturers anticipate a financial impact based on COVID-19 corona crisis. Some of them are already experiencing it as we speak. 53% anticipate a change in operations, a long-term change in operations, so an adjustment which will be effective for a longer period of time. And 35%, and that number might be up based on the discussions we had lately with manufacturing clients. 35% are expecting supply chain disruptions and are kind of revisiting our supply chain. And Bekaert is developing a series to deal with these topics, supply chain topics specifically. So stay tuned for further communication around that subject. Now, specifically for our clients, we really hear topics about liquidity and cash flow management. Some of them are going into really weekly and monthly planning cycles for cash flow. But also there's a lot of question around, is there a possibility to recoup cash? Is there a possibility to revisit, for example, tax topics, really look into tax planning on a holistic scale, not only focusing on North America. If I have international operations, really looking also into transfer pricing from a US perspective. Spend a lot of time talking about indirect tax topics, sales and use tax topics. Is there a situation where the client or the customer has overpaid sales and use tax, and is there a possibility where we can help to recoup some of these overpayments? And then really going into operational efficiencies, shop floor redesigns, specifically with manufacturing, going back online after having employees, for example, furloughed, and then rearranging the shop floor so that the interaction and the social distancing can be guaranteed, the interaction can be minimized and social distancing can be guaranteed for employees so they come back to the shop floor. And then also a lot of topics, it's kind of really accelerating the discussion around robotics and what artificial intelligence can do for the organization. And as a specific example, which I wanted to show here in this webcast, I wanted to share with you what we did for some clients around forecasting and planning, because data dashboards and modeling can really be a very helpful tool, and it's not as complicated to really bring this back to life even with existing systems. So in the next couple of slides, I wanted to show you one of the solutions for cash flow and liquidity management based on data analytics and dashboarding, being able to layer internal information, planning information over publicly available information to run scenarios and make the best decisions. In the end, it's critical to have, especially now in crisis mode, timely and in-depth information from trustworthy resources. How did we do this? In our example, and there's a link to a short video, 3-minute video towards the end of the presentation, which you can watch once you receive the document, the handout to our presentation, where we kind of walk you through all the steps and what we can do and what we offer from a data analytics possibility to really visualize implications and run scenarios in a more advanced fashion by using existing data sources. So there's no need for a big investment in new technology. So there are 4 areas we focus on. One is really customer area. So based on geographic proximity, now we are talking again about shelter-in-place regulation, shutdowns in certain communities, certain states. So putting that information into the mix from a customer focus. So who can I really sell to in what state in the United States, but also this can be rolled out globally as well. What are sales-specific implications? How do I have to adjust my go-to-market strategy? Then from a workforce impact, certainly also the shelter-in-place situation and maybe changes to that can impact decisions around this. And these tools can help as a layer to visualize and make better decisions based on understanding the whole data. Touched on this before, operation supply chain impact. So you can run different scenarios in the sense of, okay, should I change my supply chain now? How much time is it going to take? What are the options I have? And run different scenarios in a pretty easy and visually appealing way so that you can present this also to your boards and and the executive team so that everybody's on the same page. And then lastly, what if analysis. So if you run the scenarios and make changes, what does it do to your revenue? What does it do to your expenses? What are other business impacts specifically to your organization, which you would like to model in that scenario? how would this look like? I pulled here a couple of examples how that can be visualized. On the left side, you see the map of the United States and certain bubbles showing epicenters of COVID-19. This information is a little bit dated. It looks differently, would look differently today, but it kind of shows conceptually the idea of really breaking down that information and making it visible, and all these input data can be changed right away. So if you want to drill into certain information, you can really drill down into the details. So on the left side, you see, for example, for one client, we lay out the customer locations and compare the two confirmed cases, so to get an information for the client about, okay, how is my customer base changing? Who can I really sell to right now? On the right side, we have a diagram which kind of shows the impact, how basically COVID-19 is impacting sales versus last year, but then also overlaying it with government actions and major COVID-19 events. So we receive more and more questions now that people are going into quarterly closings, quarterly financial statements, that they want to have a possibility to really analyze what did COVID-19 do to my operation, to my financials, and then being able to adjust the financials, at least for internal purposes, by the COVID-19 impact or the expected impact. So to see, okay, do I have a problem with my operations per se, or is it really coming down to COVID-19 and the related implications? And then as a last slide, to show you how this resource analysis dashboard can work, we have basically pinpointed the locations of customers within a specified radius, which can be adjusted based on the organization, and all this is kind of can be modeled based on your specific needs. And then you can see if these customers are in specific proximity to COVID-19 cases or hot zones, which then also would give you an implication how your customers are affected by COVID-19. Before I hand it over to Markus, I really want to touch on two topics which are related to leasing and COVID-19, which kind of offer some relief if you have your financial statements done based on US GAAP or IFRS. The FASB basically implemented some relief in relates to rent forgiveness and deferrals, so-called concessions, which are driven by, they need to be driven by COVID-19 implications. So you basically can elect a treatment, which then helps you to show it in your financial statements in line with your expectations. And that can be applied to the lessee and the lessee, and even more powerful or helpful can be the postponement of the effective date for non-public entities, basically to periods beginning after December 15, 21. Some of you guys attending this webinar might have gone through the new lease standard and the application to your organization, and you might have found out that it's very complex to really go through, depending on your leasing portfolio, to really go through all the lease arrangements and assess it based on the new standard and make the necessary calculations and have a system in place to assess future contracts as well. So that should give some relief for organizations to deal with that regulatory change. And the IASB for IFRS, they kind of saw that as well, that there are some concessions now in place for rent forgiveness and deferrals. So here also the situation or the concession must be a direct consequence out of COVID-19, so it must be related, and it allows the lessees not to account for the rent concession as a lease modification with the respective implications on your financial statements. Furthermore, they also made a change to the effective date, basically for periods beginning on and after June 1st, 2020. So some relief. The standard was already in place a little bit earlier than in the US. And with this information, I would like to hand it over to Markus, who is taking us through some operational topics applying leasing for technology assets.
Yeah, thank you, Joe. Just want to real quick introduce CHG-MERIDIAN and then go through, the key benefits of leasing. Why do companies lease? And basically, Joe, are you going to share the slides?
Sure.
Thank you. And yeah, and then give a few examples in IT and a few examples in industrial equipment in terms of lease versus buy, and how that all relates to, increasing your cash flow or capital allocation, improving your capital allocation. So CHG-MERIDIAN, can you go back one? Sorry, Joe. CHG-MERIDIAN, as Joe mentioned, we're in three main technology areas, which is information technology, industrial technologies, and healthcare technology. We do wide ranges in all of these different technology domains. I don't want to go in detail, but it's basically from end user computing to server data center, and industrial, from the forklift material handling to industrial assets like manufacturing assets and so on. And then in healthcare, anything from patient monitoring, infusion pumps to CT scanners and MRIs. So there's a very large spectrum in all of these technology areas. I think one unique thing about CHG-MERIDIAN is that we combine not just the finance experience and the financial expertise, but also technology expertise. So me, for example, I'm an engineer by trade. I come from operations and technology management. So a lot of our company is based on the technological experience and expertise. Next slide, please. Thank you. So we're located in 27 countries around the world. CHG-MERIDIAN is about 41 years old. It's a German headquartered company. We started in IT and expanded into industrial and healthcare over the years. Yeah, I think one of the other unique points about CHG is also that we provide not just a financial solution, but also a let me call it operational bundle that encompasses the asset, the technology asset itself, but can also encompass services, software, or spare parts, or any other components that you can imagine. And we can go from a monthly payment solution for that as a service or pay per use. So the spectrum is really broad here. Next slide, please. So I want to talk a little bit about the technology lifecycle. I know this looks really complex, but it's very simple. I think one of the biggest mistakes a lot of companies make is to look at the technology lifecycle, basically just focus on the productive phase of the equipment when it's actually in use. While when you look at a technology lifecycle and total cost of ownership, it's really key to look at the three phases that the technology lifecycle consists of. The preparation phase, which is basically solution design, solution review, all the procurement activities, and so on. And then the productive phase, where it's actually the equipment gets deployed, it's in use. You have to consider all the operational concepts and the service concepts, service management. And then, of course, last but not least, a very important point, end of life phase. All the rollback activities, in IT, very heavily, actually in all areas, we see now that data erasure is key there. to reduce some of the liability aspects, and of course you don't want your data to get spread. And then the remarketing, because it's definitely not a core competency of a manufacturing organization to remarket old equipment. Yeah, I mean, key there is really, again, look at the three phases in terms of the total cost of ownership, and then the management of the technology asset throughout the life cycle. And then, of course, around all of that needs to be the financial management that's built on, what's the best solution? Is it CapEx? Is it a lease? Is it, whatever financial concept it makes sense for a specific technology asset? It's really different in many cases. And then key factors here is always transparency. You have to have transparency in the data to make proactive, educated decisions throughout this life cycle. And then also, the management aspect, there's also automation that should be used to manage the technology throughout the three phases. Yeah, so next slide, please, Joe. So why do companies lease? I mean, one of the major points right now also is reduce of capital allocation. Either to use it for other strategic projects, or in these times just to to have cash flow at hand to manage and master the crisis. Then also with a rhythm and rigor of refresh of technology comes lower service and maintenance costs. So that is a big part why companies lease. You can mitigate, or people mitigate risk and costs associated with old equipment in terms of downtimes, in terms of liabilities of remarketing. Again, it's not core competency to remarket equipment and get top dollars, or consider all of the points that could be a risk at remarketing. And also, the efficiency of the equipment. And then utilize innovations, meaning that you can adjust your technology lifecycle and how you use the technology, and also the financial model that underlays that to the innovative cycle or innovation cycle of new technology, which keeps you really on a competitive edge and gives you a leg up towards your competition. And then, of course, that's always, people that know me and that have been in meetings with me, I always preach the topic total cost of ownership. It's always, you cannot look, for example, at a lease rate or at a price tag or something like that. You always have to look at the full picture. Again, coming back to the life cycle, what are the costs through the three phases? What are all the costs that need to be considered together with just the acquisition costs of a technology asset? Thank you, Joe. Next slide, please. Here a little bit more in detail, the customer benefits. If you work with the right lessor, the leasing, the upgrading and replacing of assets is something that it can be handled very flexible, which allows you to basically match requirements in terms of, if you have production peaks, all of a sudden the demand increases, or in these challenging times you have a downturn of the economy and all of a sudden you have to adjust your technology fleet to that. A good program allows you really to be flexible around these topics, and and then also in terms of flexibility to incorporate these technology bundles or operational bundles that incorporate the software components, service components, and so on. It's definitely a big benefit. And then protect against obsolescence. I mean, again, it's coming back to lowering the TCO, lowering end-of-life risks, lowering the cost on service on service and maintenance and parts, and basically, reducing downtimes that are caused a lot by old equipment. I mean, in some cases, an example, we came to a company and they had material handling equipment that was 10 years old. And yes, it still works, but did you monitor any maintenance and service costs that are related to a specific asset? No. So after we did an analysis on the costs, we basically showed them that they already paid 80% of the actual acquisition cost of the equipment just in service and spare parts and so on. So Again, coming back, old equipment, you know, it works and it can be solid, but you always have to keep in mind the costs that it can create. Next slide, please. Of course, competitive edge. I talked about it a little earlier. You know, easier upgrading, replacing, adjusting to a technology innovation cycle. I mean, the cycles are very flexible. Sometimes they accelerate, and you know, equipment is obsolete after 2 years or 3 years, and sometimes they slow down a little bit because new technology requires you know, a longer life cycle, or can be kept around longer because the technology is more sophisticated. So it's very important and to have this competitive edge and be flexible in terms of not jumping on the greatest and latest, but more, you know, when it's through the hype cycle and it's time to adopt, to be able to adopt also from a financial planning perspective. Then also, you know, to have this the transparency around your assets, and with leasing you get a lot of transparency on the costs. Yeah. Then financial advantages, you know, again, cash allocation or yeah, capital allocation that can be used in times of crisis, that can be used for key strategic projects, and lowering the total cost of ownership. The lowering the total cost of ownership with leasing, it's you know, you have to work with the right lessor, and you have to be able to be proactive about it, because you can lower your cost of ownership only if you make the right decision at the right time. And if you work with the right lessor, they will inform you when it's time for you to make the decision on tech refresh, because they know your organization. And if you work in a partnership, they will know what you can digest from an organizational point of view to go to a next or to a newer technology model, and how to incorporate all these factors into a tech refresh plan. Yeah, and then of course the cost allocation is very simple, because you know, a good lessor provides you with the information and does cost allocation to cost centers for you if you provide that information to them. So it takes a lot of your plate with automation of some of the stuff that should be done internally. Next slide, please. Here also, you know, not just the customer side, also the manufacturer and vendor benefits. I mean, so CHG, I forgot to mention, we're vendor neutral, means we work with any vendor that's out there. But for a vendor or a manufacturer, it is really beneficial to work with a lessor, not exclusively, but to have a, you know, to basically have a finance concept available, if it's not, you know, one of the large vendors that has an internal finance arm. Yeah, I mean, basically advantages for a vendor, you know, you don't have to wait for payment terms like 90 days, 120 days, like you would have to wait if you work directly with a customer in terms of CapEx. With the lessor, you get, you know, when the lessor gets the acceptance of the customer that the equipment got delivered, they usually pay you within a day. So the cash flow position on your side is also increased. Then you know, you have an additional sales channel by, you know, the lessor will always work with you. So that's a big advantage too for a manufacturer. The manufacturer or vendor can also reduce budget constraints, because you can get away from this, I call this price tag shock, you know, because you can break it down into more digestible units. And you know, it's very good for the customer's budget. You can address some of the budget constraints, because some companies couldn't roll out new technology, but they should, because they need to stay competitive and so on. But with these solutions, you know, you can basically place your new technology as a vendor, because there's a finance model available. Reduced TCO, again, you know, what we're seeing in the market is really between 65 to 80% of the price tag. I mean, that's really our experience that we see out there, and it's something that we can show any day. Again, it needs to be managed right. That's the key point. You need to work with the right lessor. And then, of course, also for a manufacturer, there's pay-per-use models available. There are, as a service models available. It just makes someone's product much more, look much more innovative, or more flexible and more applicable. Let's say it like this. So there's definitely many benefits on the vendor or OEM side to work with a leasing company. Next slide, please. So I said I produced I created a couple of examples. They're really simple, but I just want to show you, what I'm talking about. And these don't, these don't consider freed up cash flow and how you can invest that cash flow in other projects, but they don't consider tax benefits on that side. So, I would say a lot of those, yes, they need to be considered, but just to make it simple here. When you look at this is a very standard asset that we see these days. It's the Dell laptop. So again, we're vendor neutral, and I didn't pick Dell because I like them most, but I came across and I saw them a lot in recent quotes. So Dell laptop, about $1,000. When you look at the CapEx or the buy side, in your company, you have to procure about 1,000 units. You're about, close to $1 million. You have to pay everything at once, and then the total investment again is close to $1 million. When you look at the lease side on the left, FMV lease, which is a 36-month lease in this case, 1 unit you pay $24 a month. 1,000 unit, $24,000 a month. The payment is monthly. You do not have upfront investment, or the return on invest with the productivity, calculated with the productivity, hits way earlier than when you have these humongous capex component at the beginning. And your total investment here in this specific example, I mean, there's a difference of $75,000. And I think this, this is a very easy IT example, but $75,000 is something that everything can use, especially in times of crisis, or, for other projects and so on. Next slide, please. So this is another IT example, and I just want to point out one part that I think is really interesting. You see the unit price is higher than at the Dell, with the Dell Latitude. It's like, and even though the original purchase price is higher, your monthly lease is a little bit lower. So I'm going to explain that, that basically a residual value of a product, or future value, is basically what the leasing company will sell the product for, or will get in the free market afterwards. And so this, just when it applies to an IT customer, it incentivizes you to use higher level or higher end technology, because at the end, you pay lower lease rates, and the cost difference you're even more significant. So when you look at the buy side, about $1,000 per unit, 1,000 units, about $1 million. Payment day one, total investment $1 million. On the lease side, 36 months, 1 unit, about $24 a month. 1,000 units, about $24,000 a month. Again, payment monthly, no upfront investment. Total investment of $861,000. Difference of $137,000. Okay, some companies, they basically decide on their technology needs based on what budget they have available. And I think that's the key point to consider. Maybe with a solution like this, you could get the technology that you actually need, that actually gives you a competitive advantage over, settling for lower end technology because you don't have the budget. So, and I have one more example in material handling. Thank you. So this is a pretty standard forklift, from Haehner here in the US. Again, 1 unit, about $30,000 or $28,000, 1,000 units, $2.8 million. Payment day one, I mean, you get the point. Total investment, $2.8 million at the beginning of the project, CapEx investment. FMV lease, here we're looking at 60 months, because again, you have to look at the technology life cycle. How long can equipment stay around without exploding service costs, maintenance costs, and so on. So 60-month are terms that we see here. You pay for 1 unit about $400 per month, 1,000 units about $40,000 a month. Again, payment monthly, total investment $2.4 million. In the material handling space, you see also, the difference is much greater because, of course, the investment is bigger than an IT asset, but also future values, meaning how a leasing company can sell this at the end of the lease, are way higher than an IT because there's a big secondary market. And I think, secondary market is one of the key points. When you work with a lessor, you have to make sure they have a global remarketing network, because based on that, they recoup, number one, their costs, but also make their gross margin. The better they sell it for, the equipment for at the end of lease, the better lease rates they can offer you. So that's a key component, is really the remarketing aspect. I think that was my part, Joe.
Great, thank you, Markus.
Sure.
So after talking about a couple of examples and really kind of diving into the leasing life cycle, we also wanted to touch on some softer topics which are getting a little bit more into the focus over the last couple of years: corporate social responsibility. So we were talking about technology and how that could help your operations, but it can also give you a competitive edge with the corporate social responsibility piece. So from a CO2 neutral technology, so like Markus said, if you have access to new technology, you might be able to reduce your CO2 footprint. And I think these are some topics your customers really focus on, right, Markus?
Yes, definitely. We see it coming up a lot, the carbon footprint of the company. It's in our example, we work with a company out of Canada, CO2 neutral, and we can basically incorporate into a lease price carbon credits, which helps a company offset their carbon footprint. Also, if you have old or aged IT equipment or technology equipment in general, you basically can receive cash and carbon credits for old technology, because we make sure with those companies that the technology gets reused. It's always reuse before recycle. And so there's always a secondary market for any type of technology equipment.
Right. And in addition to that, what we see is, the marketing activity about going green footprint. These are all topics which are used for marketing purposes as well. And then from a hiring perspective, we see this a lot with specifically millennials who really like to work for a company with a good culture, good social responsibility, and also having access to the newest technology to really enjoying state-of-the-art technology as an advantage in the war for talent.
Yeah.
So kind of coming to the end for this webcast, wanted to just put this in perspective, or we wanted to put this in perspective again. So I know everybody on the call and every attendee receives a million emails about COVID-19 and coronavirus and the respective implication, but we just wanted to put this in perspective here with that idea around, okay, leasing could be one solution to really look into a little bit closer when you look into your cash management and liquidity planning for the future. That this is a global issue. So if you have an international footprint or a global footprint, you might want to look into this really from a global perspective. You really have to think through supply chains and how that new technology or leasing and access to new technology or freeing up CapEx by using leasing for different projects can help you to make investments you might not be able to make without it. And then kind of, yeah, go ahead, Markus.
Yeah, just if I may, since it fits really good here, there's also solutions around if you have existing equipment that that you purchased through CapEx and you want to free up some CapEx in your company and get some free cash flow. There's also you can do sale leasebacks where a leasing company basically buys your asset, leases it back to you, and comes up with a technology exchange program, to switch to a different or newer technology if necessary, or manage that then with you throughout the life cycle. So there's benefits in that too, to free up some cash flow.
Exactly right. So in the end, ideally we want to emerge strong and more resilient out of that crisis, and we feel that leasing could be a good component as a strategy around that. And yeah, we think visiting leasing as a possibility is certainly something to consider. Which brings us to the end. Any closing remarks from your side, Markus?
No, I think I covered everything. I mean, thank you so much, everyone, for your time, and thank you, Joe, for hosting, and it was a pleasure doing this with you.
Thank you very much for attending, Markus. Always a pleasure. And just want to put out here before we depart that the leasing, we looked at this very strongly now from an operations standpoint. We also probably have to put this in the overall picture with the tax planning, tax implications, the overall financial planning, CapEx planning for the organization to really optimize it with the other rules and regulations out there. And then from an international planning perspective, really kind of looking into this from a, you have to sit back and basically look into this from a broader perspective. And to do so, it really can help to use data modeling and data analytics to get a better handle on that enormous flow and information. So thank you for attending. We really enjoyed conducting this webcast today. There will be some additional information in the handout you're going to receive probably at some point next week, and please stay tuned for upcoming events. Thank you.